So we have the data in front of us, and then we'll see how things pan out. So 30th April, right? So okay, things are fine. So basically, volatility has reduced a bit that we can see, and again, it was bad. We are seeing India VIX. So at one point of time, it was close to 19.7, and then we might have had a breakout above 20, right? It would be a very difficult scenario, but again, still hanging around 18.5. I mean, it's not coming down, so that is the issue right now. So the thing is, the whole peace deal, and then other things that are going on, the crude oil price and stuff, the price hike that has been seen in case of LPG cylinders, and the burnt of it, which is being felt by the restaurants and then QSR chains and those guys, right? This is really bad, and we don't have a solution as of now. And this is where we can see that the VIX is standing tall. I mean, if things would have been fine, then we would have seen the VIX closing below 15, right? But it's nowhere close to that. I mean, every time it tries to move up only. So we are stuck in a zone of say 17 to 20, where we are not able to decide what to do, whether to break out above 20 and the market would start crashing, or break below 17 or 15 and the market would normalize. Okay, then fear would subside. That is not happening, and we'll see again this week and another volatile day that is coming tomorrow. Election results, right? It would be a very volatile day from the morning, and since the time the market would open, one has to be steadfast and be upfront, as in not to take a bold call or take a big move tomorrow, because on a volatile day, things might swing on either side. That is the reality. And whatever happens, that would impact the market tomorrow for sure. Okay. Just understand that. And the geopolitical scenarios are still ongoing. So we have a lot of things going on, and then this is not a good scenario as such. So we'll start on the left hand side. ADX has reduced big time, which means the market has lost its trend. So right now there is no trend in the market. So the number has reduced from a high of 41 to 17 and still reducing, which means that there is actually no trend in the market. Things are neutral. Okay, you might say ki, there is significant trend in the individual stocks. That's fine. I mean, that's completely fine. But this is talking about the index and Nifty as such, right? And then again, negative perception is there, which we can see that the negative directional index is higher than the positive one. We'll have to wait and see when the breakout happens. Like when Nifty crosses over 50 DMA, marches towards 200 DMA and 25,000, then you will see this number crossing this number. Okay, we'll wait. Apart from that, the distribution day count has reduced towards 4, right? That's very good sign. I mean, distribution days are dying all along the path and stuff. So that's a good sign. And I feel this number might come down towards say 3 or below that. That would be a good sign. And this RSI thing is standing nicely, as I told you last week, that there would be a range plus minus 2%, and that's completely fine. I mean, it's all green as of now. That's a very good thing. Swing instance is open. I mean, one can take swing as per the setup if that is there. But in last 3 days, as we can see, we are losing the stocks in stage two. So basically, while the time the rally started, right? So the highest number of stocks that entered stage two, right? 181 in count. So two times it hit 181, and right now it is close to 169. So right now there are 169 stocks in stage two, pure stage two. And in last 3 days, we have seen a decline, like every day 2 or 3% stocks are kind of moving outside the stage two, right? And that's not a good sign, but this is a sign of consolidation, as we can say, right? Another good thing is last week we discussed, right? So this number would extend substantially, and this is the power trend. So what does power trend means? Power trend means like if a stock is giving a nice move and it is sustaining above its 21 EMA for quite some time, right? There's a defined timeline. So if this move is extended and the stock is sustaining above 21 EMA, then that stock would feature in this one. So as you can see, basically when the market starts a nice rally, So this number expands meaningfully. So you can see that from a single digit of 7, it has risen to 360 and it's expanding, right? So it's expanding. That's a good sign. So ultimately, it would come down. I mean, it might hit a level in some time, and thereafter it might come down. So be rest assured about that. Next is we'll move to the right hand side. I'll not discuss other things, but again, declines are much higher than the advances in last 3 days. And for last 1.5 week, you will see that most of the days we have decline days. And again, BAM days we have already discussed around the bottom scenario that we were waiting for the BAM days to happen. And right now things have cooled down, and this is normal. Okay, things are fine. Okay, this is fine. But again, we would be waiting for one more month, right? So there would be one more month. You should wait and see, not wait for anything, but we would wait and see if that month comes, and then we'll again see a nice move for the BAM, right? That's my assumption as of now. We'll see if that happens or not. On the right hand side, we'll see further that everything is green. Okay, new 52-week high low differential is quite okayish, I would say. It would have been better if this number would be in triple digits, like 100 plus or something. It's not there as of now. I think the market is into consolidation zone. It has entered consolidation right now. That's a good sign. At one point of time, we have had like 99% of the stocks above 10 DMA. Right now, it's 44. That's very nice that the stocks are coming down below their 10 DMA. That's a good sign. So all the peak hype that was there, right? It's kind of reducing right now, and we can see that 44% of the stocks are above 10 DMA. 79% stocks are above 21 EMA. So these numbers would come down and would settle somewhere close to, say, 30 to 50%, depending upon the markers which we are seeing, right? 50 DMA, 79% of the stocks are there, 100 DMA, 55, and then 200 DMA, 32% stocks, right? 32% stocks, it's kind of a normal number, but it's kind of weak. I mean, even in this market, if you see only one third of the market above 200 DMA, which means 67% of the stocks are still below the 200 DMA. That means they're kind of not investable category grade or something like that. Okay, because any mishappening could happen there. And then again, we have to see a nice reversal recovery in here, and then we'll conclude that okay, things are verified and okay. But done with this one, I think we have discussed about a lot of parameters, and we can conclude that we are into a consolidation zone right now where the consolidation is constructive. There's a strong support on the downside, which a 21 EMA is giving, and a resistance on the upside, which 50 DMA is giving. So next week, right from tomorrow, it would be a very, I would not say tough day, but a volatile day where we'll have to wait and see which direction the Nifty goes to. Okay, it would decide the trend of the market for sure. And the geopolitical scenario that is happening, the crude oil and even the rupee, the depreciation in rupee is very bad. Okay, kind of one of the worst thing that we are seeing in last 3 to 5 years, and it's not in control actually. Okay, the rupee is not in control, the crude is not in control, the whole world is not in control. Don't know what happens in the election results tomorrow, but all in all, the data is in front of you, and I believe that this is a constellation right now, and any volatility would be taken care of, and then we'll have to decide what to do, right? We'll again speak all of these things next week, and then we'll see what has happened.